Hello guys, welcome back to the channel Gyaan Valuable. Today in this video we'll be analyzing Vikram Solar Limited. So let's begin. So Vikram Solar Limited, it's a solar company. It works in the solar sector. Majorly it is into manufacturing of solar PV modules and also some facilities which is provided for installing the facility, the solar facility. And we'll start with that is financial status of the company. So you can see the current market price of the share is 196 rupees and the PE is 15, which is very low compared to its historical PE, which has been since its IPO launch. So it's to inform you all, the IPO was launched in August 2025, and since then the company has corrected deeply in its price. So it's getting more attractive as per investment point of view, and so we'll see what is the status of the financials. You can see the promoter is holding 63% of the shares, and but the major red flag which I found here is the pledging of the promoters holdings, which is 48% of the shares of the promoters have been pledged to get the money. I'm not sure why the money has been bought, but we'll analyze why the money has been pledged, that is why the shares have been pledged for getting the money. So one thing we need to be very sure, that if the money is pledged, that if the shares are pledged and the money comes into the business, then there might not be a big red flag and we need not worry about that. But if the money is going personally to the share, that is the promoters, and they are using it for their personal purposes other than for the business, then that might be a very big red flag and we need to avoid that at the first instance. So let's go ahead. Now the debt of the company is 262 crores, which is quite high. Not so sorry, it's high, but it's not so high comparing to its PAT, and the PAT is 454 crores, which means that it is earning more than what the debt is. So they are comfortable in their handling the debts. There's not a big red flag here. Coming forward to the quarterly results, you can see the results each quarter. There have been not significant, but yeah, the results are stable. The revenues are stable, and the operating profits are also stable. You can say light sluggish performance in December, but yeah, it's stable. Then operating margins have also slightly sluggish in December quarter. So December quarter results are somewhat sluggish. You can see here the net profit is also little bit of there is a major downfall here also. Okay, so that is what from the quarterly results which it says. This is the year to date profit and loss statement. That's also looking fine. Coming to balance sheet, main balance sheet, here you can see the reserves are very high in September month, because I think the reserves is increased mainly from the share proceeds which have been come in August 2025. That is why the shares, that is the reserves, have increased significantly at this point of time. Borrowings are 262 crores. So compared to historically, the borrowings have reduced, so that's a good sign. Then the fixed assets, they have completely more fixed assets, majorly the buildings, plant and machinery. So as they are in the manufacturing business, so they might be having major things in the plant and machinery as their assets. Then other assets, you can see cash equivalents were around 1775, might be because of the share proceeds which have come in, and the company will utilize those funds in the expansion of the business. That also will be is a good sign for the investment purpose. Coming to the operating activity as of March, so it's on very outdated information, but still they have a good operating profit in positiveness. Okay, coming to the ratios, major ratios, debt ratios is 131, that is the receivables are coming in 131 days. Inventory is turnaround, inventories are turned into a final products within 61 days, and cash conversion cycle is 74 days. So that's a historically it's good. Historically last from 2 years, it's very good. And working capital days is 61, so that's also it's 2 months period of time. That is your money which when it goes into inventory and the inventory converts into the final product, the final product gets sold out, and after selling the final product, the money which comes back from the customers, the total cycle takes 61 days. So this is working capital days which we can look into this. So that's not a big deal. 61 days your money comes back to the business, and they can do better in this. But since this is a capital intensive business, it's a good sign that yeah, this is something which is an industry norm, I can see. So ROCE, that is also a good thing, it's increasing. That is the return on capital employed. Whatever capital have been invested in the business, from that they have earned some good returns. That is coming to the shareholding pattern. The promoters are getting 63% of shareholding. FIIs have 1.82%. DIIs have 4.71% of shareholding, and public is having 30.45. So Vikram Solar, here you can see the FIIs have sold some major spot after September quarter. That is after the IPO launch. Might be because of their adjustment in their portfolio or profit booking. That might be the reason, and most probably might be the reason that is like end of the holding period. So lock-in period. So once the lock-in period gets ended, it's the FIS or the DIS institutions that is release out the shares. So that is what one of the things, the reason why the shareholding pattern for FII DIA have been reduced. But that might not be a big reason why we need to worry about. So we'll wait for the next quarter, that is in March 2026. So that might give a clear information whether there is a consistent selling going on from the FIIs and DIIs. If it is, then there might be a big red flag there, because till then the continuous selling of FIS DIIs will signal some negativity in the company or some bad information which they have, which we don't have access to. So anything can happen. So that's the key indexes with key things which we need to keep knowledge of when we do the analysis every quarter. So the investment purpose, we need to monitor each and every quarter what changes have been happened from the last quarter. So after investment, we need to keep continuous monitoring of the company's performance. So now we'll see the price of the company though. So the price of the company in August was 356. It went up to 378. Then from there it is just sluggish, and it came down to 196, almost 50% fall from the top, and that's a very big thing. So but the PE, you can see the PE have also corrected. PE has from 70 when the IPO was launched, it was around 80 PE. Now it is around at 14.6 or 15 PE. Today's price it's 15.6. The PE ratio is. So now the company has relatively got very much cheaper with the given growth prospect of the company. The PE is reasonable now for an investment purpose. So now we'll use AI feature of screener.in to understand more about the company's. So now we have given the question in the AI system is what is the intrinsic value of the company, what is the growth aspect for the next 3 years, also expected share price performance in the next 1 year. So the first thing, the intrinsic value, they have considered all these financial informations, the key drivers of the company, and they have come to a conclusion that in the base case, that is the current estimates what the company has, the implied price is around 350, and so that is what the in the bear case it's around 250 to 280. And the growth aspect of the company, here you can see they have some good projects in hand. They're utilizing the 84 to 87% of the company's production capacity, and the funding is 70 to 30 equity debt equity ratios. So all these stuffs. So major thing to consider in this is what is the intrinsic value of the company, what is the share price of the company. So that is what here we can see here. The expected price is gone from April June first quarter of 2026 will be around 220 to 250, which is Q4 financial 26 results, and Q2 will be 280 to 330, and end of year it can reach to 350 plus. So financial year 27 guidance. So this is what the company is expected, the share price is expected to perform based on the drivers. So on the successful implementation of all these drivers, then the price is expected to reach back to 350, the original in that is the IPO price. So this is what the company is expected to perform. And earlier I at the top I saw something regarding the expectation from Prabhudas Liladhar. So the target from the big broker house, this is a big broker house, and they have given a target of 326. So this is very huge, very huge. And also many other investors have given a good targets here. So an implied upside of 78 to 89% from the current price, which we can expect based on the current in that is the growth aspects of the company, considering all the criterias here, all the commentaries from the company. So this is what the company is about to perform. So let's see how the company performs. So yeah, this is something which is only for an educational purpose, and do your analysis, do your information, that is the complete analysis, and then invest in the company, so that there is no misleading, or I'm not trying to influence your decisions. So it's just an educational video. So I hope you like the video. So please share, like, subscribe, and also comment your views on this video. And so take care, bye bye, happy investing.